working with the criminal investigation unit. That's who's going to be looking and working with you to get to that voluntary disclosure. Hi, my name is Rebecca Sheppard. I'm a partner at Frost Law, tax attorney, and I'm here with my law partner, Peter Haukebo, and we are going to talk to you about the new proposed voluntary disclosure program from the IRS. So what does this mean for taxpayers who've previously done a voluntary disclosure, and how does this change for practitioners in discerning whether or not your client is a good candidate for this program? So Peter, do you want to do a quick overview of the old posture? What was happening in voluntary disclosure in yesteryear?
Well, and I guess just to clarify, it's still in place right now. The IRS has proposed these changes, but they haven't exactly finalized them yet, and that will be coming, in the next several months. Right now, voluntary disclosure is a little bit kinder, gentler as far as timing goes, and potentially as far as the penalty regime goes. But right now it's a two-part process where taxpayers seek pre-clearance and then seek preliminary approval related to the voluntary disclosure. It's a two-step process on a form filed with the Criminal Investigation Division of the IRS. It can take a long time to go through after that preliminary approval is obtained. And so taxpayers end up waiting for a long time before they actually go and make their disclosures. The key penalty features right now is that in exchange for not assessing accuracy-related or delinquency penalties, taxpayers are hit with a 75% fraud penalty or fraudulent failure to file penalty on whatever the high water mark is, whatever tax year or period has the highest balance due. And those things are going to change if the proposals become finalized, right?
That is correct. So right now, just to back up a little bit, a voluntary disclosure is when a taxpayer who had some willful misconduct voluntarily comes forward to the IRS. So you can't be under audit, you can't be under criminal investigation, you have to be coming forward, and the IRS has to not know who you are. So the first phase of the program is this clearance phase where you submit your information and the IRS comes back and clears you that you are not in their system and that you have not been under criminal investigation, you're not under examination, you can go forward with the process. So that's the basket of taxpayers that we're working with. Whether or not somebody didn't disclose all their income on their tax returns, had inflated expenses, didn't file tax returns, and had very large income, things like that. People who are just typical non-filers who might owe some taxes, W-2 employees, typically would not be the candidate for a voluntary disclosure program. You want to make sure that that candidate or that taxpayer is willful. There's bad conduct there, which is why there's such a high penalty. And you're working with the criminal investigation unit. That's who's going to be looking and working with you to get to that voluntary disclosure. The benefit is that you will not be prosecuted, or most likely will not be. There can't be a guarantee, but typically that is the exchange, is that you're coming forward, you'll pay the amount due, but you won't be actually charged with anything criminal. What you could do in the prior program is pay that amount over a period of time, and under the new regime that's proposed, there's several changes. So the first is that it's purely electronic. You're going to file a form all at once with the government. Once that is accepted, you've been accepted into the program and cleared, you then have 90 days to pay the balance in full. Whereas before, you'd wait for an auditor to be assigned and work with that auditor to determine the total tax liability and to determine whether or not voluntary disclosure can be processed. Here, you're submitting the forms and then making a payment within 90 days without a human contact. The penalty regime is also different. You're not having that 1 year of high 75% penalty. Instead, you're going to be hit with a late filing penalty for each year of noncompliance as far as filing goes. If you're filing amended returns through this process, you're looking at a 20% accuracy-related penalty on each year. So it actually depends on whether or not which program has the worst penalties. It's kind of a calculation you would have to do, but it changes the conversation completely with who the taxpayer is and whether or not they're a good candidate for this new program. Do they have the funds? Are they able to get the funds in a short period of time, where that hasn't been a consideration before? Instead, before, we would kind of race to get these things done to make sure they got through clearance.
Yeah, and I mean, we're in a weird transition space right now where these rules have been proposed. Right now, they're requesting public comment until March 22nd. Taxpayers that have either started the process or may be starting the process, it's a little bit unclear exactly what rules may apply. And so going and doing the analysis and understanding, do you really want to try to get into the old program and get in there quickly? If you could, again, under the old program, waiting for an auditor to be assigned can take
over a year.
Over
I filed
a year,
one a year
easily.
ago, and I still have not received anyone attached to the file. And that's the reason, or one of the reasons certainly, why the IRS is moving in this position, right? The IRS, no surprise, is having some staffing shortages in the last couple of years. There's been some dramatic staffing cuts, along with some early retirement and some other changes in the organization. And so moving away from such a person-to-person file and instead have AI and some other factors work with the taxpayer in reviewing these forms to see whether or not you need to rise to the level of a criminal investigative agent is going to save the government quite a lot of time and probably bring in a lot of funds.
Well, and the other big change that I don't think you mentioned is related to the payment terms, right? So Rebecca mentioned that previously, or under the current rules, you could seek an installment agreement. In this situation, there is no installment agreement. When she says after 3 months, you have to make those payments are due along with the returns, along with the disclosures. What happens after that, we don't really know. Will someone actually get involved in the file and the case and reviewing, do interviews, those types of things that potentially would be happening under the old program? Or are they going to employ, data scientists and AI and review of the disclosures and then sort of selectively make determinations based on their staffing capabilities?
The comment period to go through the voluntary disclosure program is through March 22nd, and at that point we'll see what the IRS chooses to adopt with their voluntary disclosure program. But for now, if you have strong feelings, you should let the government know and go forward with that public comment period. And if you've got any questions, please make sure that you reach out to us. We're happy to talk through any issues, whether or not you think your taxpayer, your client actually rises to the level of that willful taxpayer where they would want to enter into this voluntary disclosure program, whether or not it makes sense, like how to prep them for it, what do you need to do. We're happy to talk through any of those issues. Thank you so much.